The biggest focus right now for people has been to not want to purchase because they think interest rates are too high, rates will come down. They want that 2.5% interest rates.
One of the bigger issues in our business is when everybody gets busy, they're so caught up in the weeds, right? I'll use a refi boom, for example. When refis were huge in 2020, 2021, 2022, you had a lot of loan officers running around, just focusing on refinances as if it was going to last forever.
If I look back from 20 years ago to clients that bought 20 years ago, 10 years ago, 5 years ago, every single one of them is in a good spot.
Yep.
Even if I had clients buy in 2007, which was a horrible time to have bought, I now see that they're doing well.
Not every loan can recast. A lot of times conventional are recastable. FHA, VA, not always. And it really depends on the specific investor for the loan, right? Fannie Mae, Freddie Mac, who's buying the loan on the secondary market. So it's really important if you want to recast to tell your mortgage professional up front that that's something that you want to do to make sure that they put you in the right program that would allow it. Owning real estate and being the landlord and those types of things, it's not necessarily like a glamorous thing. I think people have this idea because they're taught when they're young, hey, you want to be able to make money and build generational wealth and those types of things, like own real estate. The good part of owning real estate is the upside, the ability to make off of appreciation and cash flow and having somebody pay down and leveraging, but it's not completely passive.
Hi everyone, welcome to Making Money with Laura Sanders, and I am your host, Laura Sanders. Every week we talk about something that will help you make a little money, save a little money, or maybe just help you navigate this crazy world we live in, because boy, is it one crazy world. And right now, the biggest focus right now for people has been to not want to purchase because they think interest rates are too high, rates will come down. They want that 2.5% interest rate. So with me today is Max Fish from Revolution Mortgage. That is the new mortgage company, because what I'm being told, you could probably get a rate 0.5% less than other mortgage lenders. So if you're thinking about buying and you're just not sure and you wanted to see if he is more competitive, I highly recommend reaching out to Max to see how he can beat all those other mortgage people.
Thanks for having me.
Yeah, thanks for being here. So, obviously houses are selling or you and I wouldn't be here.
Sure. Yeah. Listen, and my understanding is in any market, there's always people buying and selling. Sometimes it just gets a little bit more condensed and, market share goes to, certain people that, have been marketing themselves and have been, getting out in front of past clients. And I just feel like really one of the bigger issues in our business is when everybody gets busy, they're so caught up in the weeds, right? I'll use a refi boom, for example. Mm-hmm. When refis were huge in 2020, 2021, 2022, you had a lot of loan officers running around, just focusing on refinances as if it was going to last forever. Got to
have baskets.
Right? And so in times like these, it's like the old saying, the cream rises to the top,
Right.
So.
But the other thing is though, basically with what is going on right now, one thing I can say is that if I look back from 20 years ago to clients that bought 20 years ago, 10 years ago, 5 years ago, every single one of them is in a good spot.
Yep.
Even if I had clients buy in 2007, which was a horrible time to have bought, I now see that they're doing well.
Yeah.
They're okay. So it's like a mutual fund. It bounces up and down, but it always comes back. And real estate is a great investment, a great diversification. Yep. I think you own a couple of Airbnbs, or you did.
Yeah, I did and I do. But, Airbnb, the reality of South Florida is interesting, right? Because there's such a wide range of like need and demand, right? Because it's not just, okay, in South Florida, people rent long-term. They rent long-term, they rent short-term. They're buying condos, they're buying single-family homes. It's very, as I talk to people that are from different areas, it's very consolidated, right? Like in this area, there's no such thing as a condo. In this area, nobody does short-term. And so here we get to see almost everything, the entire gambit of what you can actually do with real estate, whether it's commercial, residential, variations, and that those things encompass. So it's pretty interesting.
So I guess another thing is that a lot of people want to maybe move up or move down, and they're like, well, I don't really have the money. I need to sell this house to buy this house. So I've always said to them, well, go ahead and sell, we'll put this one on the market. You'll go buy the other one because you have enough money for a low down payment.
Yep.
But they're like, well, I don't want mortgage insurance. And I understand that. But what I tell them is you can do a one-time
Mortgage recast.
right. Let's talk about that.
Yeah, mortgage recast is an awesome option. So a lot of people think in order to, well, let's start foundationally. Typically, the way that a mortgage works is that your principal and interest payment is based off of your initial balance. And it doesn't matter how much you pay off of that, your principal and interest payment stays the same.
Correct.
Traditionally. With a mortgage recast, the cool part of how that works is, let's just say you start off with a loan of $600,000 and you sell your home and you come into some money, right? $300,000. Let's just say it's $300,000 you come into. If you just took that $300,000 and put it into the mortgage, your payment stays the same. It's just you owe less. As a part of a recast, you can take that $300,000, apply it to the principal balance, and the mortgage company will recalculate the principal and interest based off of the new balance as if you started with that balance.
Okay.
And so it's not shaving years off of your loan because they're lowering your payment.
Right.
Right? But what it's doing is it's making it more affordable, and it makes people feel more comfortable to get into the home even with a higher balance, knowing that when they sell or whatever they're doing, maybe they come into an inheritance or whatever the case may be, they can take that money and lower their monthly payment without refinancing.
Right. So how long do you have from the time you buy to do that? And can every loan do this?
Not every loan can recast. A lot of times conventional are recastable, I guess I could say. FHA, VA, not always. And it really depends on the specific investor for the loan. Okay. Right? Fannie Mae, Freddie Mac, who's buying the loan on the secondary market. So it's really important if you want to recast to tell your mortgage professional up front that that's something that you want to do, to make sure that they put you in the right program that would allow it.
Okay.
But to answer your first question, you typically want to wait about 30 days after closing to be able to do it.
Okay.
Just because you want your mortgage to register and you want everything to
But what
to
if,
kind of be in the system.
3 years into the loan you inherit, a bunch of money and you really want a lower mortgage payment?
Yeah, so you can definitely call your mortgage servicer at that time and ask them if recasting is an option. Sometimes,
I would say that the likelihood they would even be able to answer you would be very frustrating.
Yeah, I mean, you'd have to call the right department, right? And again, your mortgage professional, whoever did your loan initially, should be able to guide you to who to call and what that
Even if
process
it's
looks
been
like.
sold, like the loan's been serviced and sold?
Yep, because they could track it.
And tell people how they shouldn't worry if you're going to sell their loan. Who cares, right?
Yeah.
Some people are like, oh, but they're just going to sell my loan. And it's like, who cares?
Yeah,
Your terms don't change.
The terms don't change. It's just who you might be making your payment to. But just so people understand, selling loans is what makes our economy flow. If banks couldn't sell loans, then their liquidity would run dry, which is what happened in 2008, by the way. In 2008, there was a bunch of loans that banks had on their books that weren't sellable. And so they had all these loans.
Pick-a-pay, it was like 4 different options.
Yeah, they had all these loans that they couldn't sell, and they ran out of liquidity, so they had to shut it down. And so it's important that the mortgage market sells these loans, as mortgage-backed securities to keep our economy flowing correctly.
Okay, so that gives some idea to people that want to buy, and they're waiting to sell their house, and they're like, well, I want no mortgage insurance. So this is something that you can definitely talk to myself or Max.
Yep.
We can definitely guide you on that to make sure that you have some ideas of things of what to do. The other thing that we talk about all the time is like, well, should we be buying?
Yeah.
And I always say, if you got money.
Well, here's what the last few months and years really have showed us is that top economists don't know what the market's going to do. Mm-hmm. I don't know what the market's going to do. You don't know what the market's going to do. Nope. And I guarantee you, if all of us don't know that, buyers don't know it either. Right. And so the biggest thing is we just don't know from day to day or from week to week, month to month, what the rates are going to look like. I'll give you a perfect example. Last week, the jobless claims report came out and the CPI report came out. CPI report actually came out favorable and rates didn't move that much. And so what that tells us is there's not really a rhyme or reason to where our interest rates are right now. There's so many variables, both nationally and internationally, that it's very tough to read. It's very tough to plan. And so if there are people out there, for everybody listening, telling you that rates are going to be low by the end of the year, or, you should wait, or whatever the case may be, nobody knows that, right? And so the best advice that I can give is let's run through your monthly payment figures. Let's figure out where your comfortability level is. And to your point, if you bought now, you're comfortable with your monthly payment, you're not going to lose in real estate over time. And so that's the biggest.
It's never worth nothing.
Correct. That's the biggest.
You still have something tangible.
Yeah. That's the biggest, talking point and conversational piece that I think is important to have with people.
Now, I had an agent the other day call me, wanted to make an offer on one of my listings for herself. And she was like, the market's tanking, it's crashing, it's this.
Yeah.
And I'm like, I think condos have an issue, but I feel more like the houses are just correcting themselves.
Yeah. It's, I think that there needed to be a little bit of reprieve, right? Like the low interest rates and the COVID fiasco really just drove things out of control. And there needs to be, I think it reset the bottom and the floor. I do. I don't think things are going to be as cheap as they were prior to that.
Right.
But there needs to be a new foundation set, right? Things need to settle, and then, obviously over time things can start appreciating again.
Right.
At a rapid pace.
It's definitely. Well, we're going to go to commercial break, but before we do, let people know how they can reach out to you if they're thinking about and they want to check out this lower interest rate from other lenders.
Yeah, best way to always reach me is my personal cell phone at 954-729-6933.
And if you're looking for a top agent that can get your home sold for top dollar and look its best, and also if you're looking to buy and you want to make sure that you're not falling into inspection pitfalls, definitely give me a call, Laura Sanders Remax Direct, 954-650-0827 or www.laurasell.com. We're going to be right back after we go to commercial break, and we're going to continue to talk about what's going on in the mortgage industry and what you need to be looking out for.
Whether you're buying, selling, refinancing, or building your dream home, you have a lot riding on your loan specialist. Max Fish, a top 1% mortgage loan officer in the nation, will give you a same-day qualifying quote. Max Fish is committed to providing his customers with mortgage services that exceed their expectations. Ensuring that you make the right choice for you and your family is his ultimate goal. Contact Max Fish today at 954-729-6933 or max.fisch@nwmcorp.net.
At JK Closing Attorneys, we do all of the same things that a title company does, but with the benefits of being a law office. We can help with residential real estate, short sales, commercial real estate, refinances, 1031 exchanges, and FIRPTA withholding.
Contact JK Closing Attorneys today at 954-332-3111. Again, that is 954-332-3111.
Hi everyone, welcome back to Making Money with Laura Sanders, and I am your host, Laura Sanders. So today we're talking about mortgages. Everybody's talking about mortgages. They're talking about, should I buy a house? Should I sell? What should I do? I'm sitting on a 2.5% interest rate. Here's the answer. I don't know what the answer is for you because I don't know who you are. You're listening to us. Every person's going to be a different situation. I was talking with a customer the other day, and they said that they're losing like $3,800 a month on their house that they rented out, which I'm like, that's a lot of money. So the question is if you can't dispose of $3,800 out of your own pocket because you got an equity line on it, you've got higher taxes, like every person's going to be different. You know, if a 78-year-old asked me, should I sell my rental property? I would probably say, yes, sell your rental property.
Yeah.
Enjoy your life.
Yeah. It's tough. I mean, listen, at the end of the day, like owning real estate and being a landlord and those types of things, it's not necessarily like a glamorous thing, right? I think people, people have this idea because they're taught when they're young, hey, you want to be able to make money and build generational wealth and those types of things, like own real estate. But the good part of owning real estate is the upside, the ability to make off of appreciation and cash flow and having somebody pay down and leveraging. But it's not completely passive, right?
Right.
Like there's definitely a need for a real estate professional to help navigate it. And even after you close on an investment property, the mortgage process is just step one. Now it's okay. Being a landlord comes with its own set of responsibilities.
Yeah,
So
it
I think it's
does.
just important that people,
Yeah. So you kind of stepped out
recognize
of the
that.
landlord kind of thing, huh?
A little bit. I had, there's management companies out there that can help with helping you with your properties and those types of things. But
Well, for Airbnb, are you using a management company?
yeah,
And how do you feel about it?
I like it. They handle everything. I mean, management companies come at a cost, right? They're expensive.
Right. But they're doing a good job. You feel like it's being handled appropriately?
I do. Airbnb is such an interesting space, right? Because people, when you have, let's just say you have two houses in the same neighborhood, and one person bought their house 20 years ago and their mortgage is $1,000 a month, they can have $199 a night. And then you could have the same house 3 houses down, somebody that just bought it 3 years ago, they need to have $399 a night. So it's interesting when you look at the landscape of Airbnb, like over,
Right. But nobody's going to $3.99 a night.
That's the interesting part of it, right? Is that it's not like your brain is wired of like a hotel, right? Like, okay, the rooms are all similar in price, right? But with Airbnb, it's like if the $199 is booked, your only option is the one that's
true.
$200-300 a night,
But
right?
I don't think they're all booked right now.
No. But my point is
What would you say your
it's crazy
occupancy
that
is? Do
you're
you know?
seeing those differences in prices.
Now, I think you have a really nice one, right?
Yeah, it's like 62%.
Okay.
Yeah. So it's weekends, Thursday, Friday, Saturday, Sunday.
Oh, okay.
Yeah. So that's really what that one looks like. But Airbnb, like I said, it's interesting. It's interesting.
Yeah. But
And a lot of cities are, I mean, you would know this more than me. A lot of cities are outlawing them, right?
you can't really outlaw them. They can make it difficult for you. Like the city of Coral Springs, for example.
Uh-huh.
Everything better be permitted.
Yeah.
Everything better be permitted, or you're not getting that passed.
So Coral Springs allows Airbnbs.
They allow it, but they frown upon it.
Yeah.
And everybody complains about everything.
Do people Airbnb in Coral Springs? Mm-hmm. Really?
I don't know why you would, but it's funny. I get calls all the time from agents. It's funny. Like if I have to sell my house and I'm gonna have to go stay at Airbnb, wouldn't you want to stay by the beach?
Yeah, that's what
People don't. It's weird.
Yeah.
I guess they don't want to. Well, right now school's almost over, so this would be the perfect time.
Yeah. That's interesting.
I think it would be the perfect time.
Yeah.
So another thing is short sales.
Yeah.
I get a lot of people call me, oh, do you have any foreclosures? And I'm not yet, but I think the foreclosures are I had somebody call me on a condo that they paid $279 and they were now listed at $199.
Jeez.
Yeah.
That's wild.
Isn't it?
Can you believe that?
No.
When did they buy it for $279?
It's 2 years ago.
Yeah.
Why are you moving?
Yeah.
But then also a lot of those that have been $400 in maintenance, now they're like 7 something.
Yeah. But
So-
I'm starting to see some of that come down.
The maintenance?
Yeah.
They're recorrecting it?
Yeah, because insurance is starting to after all this work is being done with these buildings, insurance isn't as expensive.
Really? I haven't seen that. Where did you see that?
Yeah, I'm seeing it. I can't think of any of the associations off the top of my head, but I
Right.
have seen it to where insurance deductibles were 10% because of how expensive they were the past couple of years, and now they're
Okay.
going back down to 5%, 2%,
Oh.
and it's becoming.
But the thing is that if they do a deductible at 10%, they're screwing up them with having the ability to get a
Can't
conventional
finance.
loan. Yeah, no Freddie Fannie.
Yeah. Well, a lot of
But
these,
you have people that can do it, right?
yeah, a lot of these associations, they're becoming a little bit more aware of
Requirements.
the requirements for conventional loans, but really the consequences of the decisions that they make as far as, it's not just when you're sitting in an associations meeting. The last few years, it's almost been like, okay, we're going to make some decisions, that could be looked at as or deemed good for us financially.
Right.
But then they're locking everybody's property up to only be sold cash because the decisions they're making, are affecting the ability to finance
Until they want to sell.
Yeah, and then they make the decisions.
Right.
Yeah.
I mean, I don't even know, like Ramblewood East wasn't financeable. And then like 2 years ago, I was able to get mine sold with a mortgage.
Ramblewood East is tough because of the litigation.
But I had an affidavit signed.
Yeah, there's ways around it. It's just really like that at any given time, it's just they got a bunch of stuff going on.
Yeah.
But there's a lot to dive into, with associations and condos. And just so everybody knows, the reason why is because when you purchase a condo unit, what everybody else does and what the decisions the association makes impacts you. It's not like you're just
Right.
in your own little world, right? Like a single family home would be. If the other people in your unit are late on their HOA dues, or they're, not paying their special assessments, or the majority of the condo units are owned by investors,
Yeah.
right? All of that directly impacts the value of your home and impacts your financials, because at some point that HOA is going to say, hey, if people aren't paying their special assessments, what are we going to do? How are we going to pay for these repairs? How are we going to do what we need to do with the building? How are we going to keep up? And then, there's a trickle down. It's a domino effect.
Yeah. It's been definitely interesting.
Yeah, yeah. It's always a chain reaction.
Yeah. Well, I mean, I still think it's great to be buying. It just depends on what it is. You are correct. I mean, I had somebody else saying, oh, you can't rent things, blah, blah, blah. I'm like, people rent.
Yeah.
What sellers need to understand, or owners, landlords, need to understand that the rents you got 2 years ago are not the rents you're going to get today. They're a little bit less.
Yep.
But still better, especially if you bought. So think of it like this. If you bought real estate 20 years ago or 10 years ago, you're doing very well on the rents versus what somebody just bought it this year.
Correct.
So the thing is that think for the future. Your cash flow might be nil,
Yep.
but you're still paying a small amount of principal. It's not much,
Yep.
a small amount.
Yeah, I mean, I think that gets lost, right, with investment, is that, there's three ways to make money on investments, right? There's appreciation, there's cash flow, and they're paying down your asset.
Yeah.
What you owe on your asset, right? So there's three ways to make money. In my opinion, and a lot of podcasters will tell you differently on Instagram and all these things, but in my opinion, it's okay if one of those things are missing, right? It's okay if you're not cash flowing on your property, because guess what? Your property is going up in value over time,
And somebody's paying down the principal.
your balance.
Right.
But I feel like that's lost, right? People feel like, oh, if I'm not coming out positive.
No, of course. Yeah, I disagree with that. Right.
Yeah, then
you shouldn't need to. And I explain that to people, and then they go, oh, really? I didn't think about it like that. And
Yeah.
I go, that's why you have me.
Yeah,
To make
exactly.
you think about it in a different way, but I also talk about what's it like to own, right? How do you feel if you have to put a new air conditioner in? How do you feel if you have to put a new roof in? How do you feel if you have it empty? Like, trying to be greedy on a rental can cause you 3-4 months in rent.
Yeah, absolutely. And kind of a sidebar. One of my pet peeves too with investment properties and with primary residences, is when people feel like if they pay off their mortgage, then they don't have any payments anymore. And if you look at a mortgage, let's take a $800,000 house, and say your mortgage is $6,000 a month. About almost half of that is taxes and insurance.
Right.
And
So you're still gonna have that later.
Yeah, and if you pay off your mortgage, let's say you put $800,000 into it and you paid off your mortgage, taxes and insurance doesn't go anywhere.
And I tell people you need to think that.
Yeah,
What is that
and
going to
it's
look
the same
like?
thing with investment. If you buy an investment property cash, you still have taxes and insurance to pay for. So you're saving the principal and interest,
Right.
right? But you still have the taxes and insurance to pay for. So my question to people that, and obviously take it with a grain of salt, I'm a little biased because I'm a mortgage guy, right? I get that. But I do think that a healthy amount of leverage is a positive thing.
Yeah, you need
Right.
to. If you don't leverage, you're not going to have anything.
Yeah, I think a healthy
You can't
amount
just
of that
work
is
a job.
Yeah, if you let's use that model. If you have $800,000 to spend, instead of putting it all down on one house, you put a
Couple of
healthy
houses,
amount,
yeah.
30% down. If you have all
And you'll
that
have
money,
multiples being
yeah,
paid
then
off
you
at the
use
same
it,
time.
and then you just and disperse it, and that's really where I feel like wealth can be built.
You just have to be willing to take the risk, and you
It
need
is,
to be
it
willing
is,
to take
yeah.
it. So what's a good number again to reach out to you? Because I know they want that great deal that you're giving.
Yeah, 954.
Chicken. I'm just kidding.
When was the first time we did that? We did that a long
Time ago. Yeah.
But,
I think it was like Thanksgiving.
Yeah, but
Turkey or something.
Anyway, so
Gobble.
my phone number is 954-729-6933.
And if you're looking for a top realtor that can help you to get your home sold for the quickest amount of time and the most amount of money, that would be me, Laura Sanders, Remax Direct, 954-650-0827. And like always, thank you for listening. And until next week, make it a great day.